And that marks the beginning of my program, Gilbert Talks Taxes, because as we all know, taxation with representation has not been such a good idea either. Good morning, everyone, on this 4th day of March. Here we are, March already. The program is Gilbert Talks Taxes. I am Gilbert Carmona. I am an enrolled agent. An enrolled agent is a person enrolled with the IRS, the Internal Revenue Service, Department of the Treasury, to represent you, taxpayers, to prepare your tax return, to help you with all kinds of financial problems and questions that you may have. Good morning. We're here live this morning, WCAB AM 590, FM 100.9. Those of you live streaming me here in the Blue Room, www.wcab59.com. Good morning. I have two offices, one in Forest City, our flagship headquarters. I just like saying that. It makes it seem real important, Tom. My engineer this morning, Tom. Our flagship headquarters at 704 Oak Street in Forest City. I also have an office in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. But one telephone number gets you appointments at both locations. That number is 828-289-9300. Again, 828-289-9300. And we are doing tax returns. That is our number one business, is tax returns. And yes, we are accepting new clients. That's the phone call I get right now, this time of year. Are you accepting new clients? Yes, we are. And we are preparing tax returns. Now, the March 15th deadline for 1120S corporations, S as in Sam, 1120S corporations, LLCs, partnerships, if you are being taxed as a S corporation and you file an 1120S, those are due March 15th. Okay, now depending on the complexity of that tax return, if you're a new client, we may need to extend you, which we can take care of that. We will file an extension because we're starting to fill up on those. There's 11 days left for those filings, and we're pretty much on schedule with those. We're getting them out pretty quick, especially those of you that we do your bookkeeping and we do your payroll and we do those things for you. We're pretty much on top of those. But new clients, we may be looking to file an extension, and we just filed an extension till September. There's really no downside to filing an extension. If you don't think you're going to have your things pulled together, or if there's anything coming up, contact us. We'll go ahead and file an extension. You can always, we might be able to get it done early. You never know, but at least with an extension, you're protected. Also, partnerships. If you have a partnership, you file a 1065 tax return. Those are due March 15th. But the rest of the world, we are April 18th this year, okay, which is a Tuesday, not the 15th. The 15th falls on a Saturday. So IRS rules say that if it falls on a Saturday or Sunday, we go to the next business day. Well, the next business day is Monday, the 17th, but that is a holiday in Washington, D.C., and the federal government is shut down. Believe it or not, they are shut down on the April 17th, so the date moves to Tuesday. So midnight of the 18th, all those tax returns are due, and we are briskly getting those done too. Again, if you don't think you can have everything pulled together by then, we can file an extension. An extension takes you all the way to October 15th. Now, we're not going to wait till October, right, Tom? Nobody's going to file an extension and wait till October 13th and then call Gilbert and ask him, what was that deadline again? Yeah, that doesn't happen very much. Okay, so a couple of subjects I want to talk about this morning. First thing I want to get into is, I get a lot of phone calls, and I get a lot of them. And the closer we get to the deadline date, I get these phone calls. Am I required to file a tax return? And my answer to that is an affirmative. It depends. It depends because it just depends on your situation. Are you required to file a tax return? Usually the people asking me that question are either people that didn't work very much, well, didn't work at all, or didn't work very much for whatever reason. There's many reasons why people might not have had a lot of employment, or people that are just retired and usually have that question. So the first question is, well, how much money did you make? So the bottom line rule is, if you don't owe any money to the government, you don't have to file a tax return. Okay, that's just the bottom line. If you don't owe any money, you don't have to file a tax return. But what if the government owes me money? Well, that's actually on you to report it, that they owe you money. That's what a tax return is. You are returning it back to them, telling them, hey, you owe me this amount of money. But if you do not owe them any money, you do not have to file a tax return. And we usually look at what the gross income is. And I've got a whole chart of these. As an example, if you're single, a single filer, and you are over 65, if you made less than $14,700 of W-2 income, again, W-2 income, you do not have to file a tax return because your standard deduction is $14,700. Now, if you did work and you got a W-2, you might be getting a refund if they withheld, because they start withholding at a pretty low threshold. So if you made over $4,000, it's likely you've had some withholding for the federal and the state. And it may be a small amount of money. You may not need to go see a tax professional and pay money to have your tax return done, but there are, free tools. I know many of the senior centers were having, trained tax people that were doing it for free to help senior citizens. And I know different places, that can do it for free. You can do it yourself on irs.gov using the IRS's free file tool for basic tax returns, and you would get that money back. And it may not be a lot of money. Some people, do it just to do it. They get back, $10 or something. I still bend over to pick up pennies, Tom. For $10, I'd be filing that tax return. I've had people say, oh, it's only $9 or whatever, because they'll bring it by the office, and I'll look at it, and I'll say, well, no, you don't have to file this because you're going to get back. So you don't have to, but you're letting the government have $6 or whatever. Like, forget about it. I'm like, well, for $6, I would do it, okay? That's just me, though. Again, I bend over to pick up pennies, okay? So just pick them up in the parking lot, by the way, here in front of the station. So if anybody's looking for a penny, you can tell them Gilbert's got it. Come see me. If you're head of household, so those filing thresholds move up and down. If you're single, under 65, and you made $12,950 or less, you do not have to file a tax return. Head of household, 65 and over, it's $21,150. You get the point. It's connected to your standard deduction. Again, now if you make Social Security, if you're retired and Social Security is your only income, and it's going to be more than that, you do not have to file. North Carolina exempts Social Security income. Not every state does. You need to see your state, but North Carolina does exempt it. And then the taxation of Social Security begins at a much higher threshold than the standard deduction. So if your only income was Social Security, you've got nothing to worry about. You do not need to file a tax return. Now, this is the it depends part. You're married filing separate. If your filing status is married filing separate, the standard deduction rules go out the window. So, and age doesn't matter. If you made more than $5, literally that is the threshold, $5. If you made more than $5, you have to file a tax return. Okay? The IRS is going to be looking for a tax return if you're married filing separately. Okay, that's the only one that's got that low a threshold. The other one is if you're self-employed. If you're self-employed and you received a 1099 NEC, non-employee compensation, you're self-employed, you people know who you are, you have to start filing a tax return because your self-employment tax kicks in at $1. Okay? Now, and again, that's not gross income, that's net income. So you get a 1099 for, I'm just making up numbers, $5,000. You had $4,000 of expenses. You are going to be taxed on $1,000. So if you're self-employed, you have two taxes going on. You have income tax, okay, which is that standard deduction threshold that kicks in, but you also have self-employment tax, which kicks in at $1, which is the 15.2% tax. So you may not pay income tax, but you're going to get hit with that self-employment tax. So those of you that are self-employed, that's a different story. And that's the story I share about the man. I've shared this story many times on the radio, there was a retired man. His daughter actually came to me. He was retired, and he had actually moved on. He was living in assisted living by the time the IRS sent him a letter. And what had happened is his daughter, what happened is he had done some work for his church. And he did it as a donation thing, he thought. Okay? He went and got materials, and he did a thing, but the bookkeeper at the church said, well, you know, Bob, not his real name, by the way, Tom, you know, Bob, we really want to reimburse you for that. You know, we've got a fund for it. And he's like, well, okay. So he gives him the Lowe's receipt, whatever. And it was $4,000 or $5,000. And they went ahead and gave him a couple of $100 for his trouble. And he accepted it. And he said, okay. And so they write him this check, and he gives them the receipts. And then at the end of the year, he gets a 1099 because he had done work for the church before, years before, and they had his information. So the bookkeeper at the church, being a good bookkeeper, because she's supposed to do that, went ahead and gave the guy a 1099, which he promptly ignored. So a couple of years later, he starts getting letters from the IRS telling him that he owes this money, which he threw in the garbage. So the daughter, well, because, he thought he's retired, he gets Social Security income, that's the only income he had. He had a little nest egg he was living off of, but nothing there. So he's got Social Security, and he knows Social Security is not taxable. So he throws these letters out, the IRS, what do they know? And gets into assisted living, and his daughter starts looking at his mail, and his daughter's like, what's going on here? And she brings it to me, and I said, oh, no. Well, because she took him to him, and he said, what is it? He goes, just ignore that. That's nothing. That's that IRS. That's yeah, that IRS. Yeah. No, don't pay any attention to them. Throw those letters out. So she got a little nervous. And so she gives me a phone call, and, we were able to clean the thing up for him, but in spite of him, he didn't cooperate at all. Fortunately, she was his POA, and she was able to take care of it. We were able to get the penalties waived and reconstructed that, filed a tax return, and did it, and got it off to them, and the problem went away, and got the penalties abated and everything. And I tell you, I only charged the guy. I charged the guy just for a little bit of money for my time, and I said, no, this is gonna be a great radio story. I'm gonna be telling for years. Okay, so this one's on me. But I've got a bunch of stories like that where people don't realize because they don't think, oh, I'm gonna owe. But you got to stop and look and see, what did you do? Now another thing that happens is people will get retirement income, and they'll still be under these thresholds because they may have worked somewhere. I see this a lot with people that might have had a state job, a small state job. They didn't make a lot of money. They didn't work very long, so they didn't get a full retirement. They'll get a partial retirement. In military, they'll get a partial retirement, and they'll be under these thresholds. But you'll have withholding. So you want to go ahead and file a tax return to get that money back, because some of that withholding now could be substantial. It could be $400, $500, $600, $700. I've seen with some people. I've seen it be as high as $1,200 of withholding. So you're still below your threshold. It's not affecting it. You have no quote-unquote taxable income, but you're getting that money back. So you want to look at that. You want to look at what the income source is. What is it? And then again, we're getting ready to take a break here, so let me finish with this. Again, we get to the ID theft thing. My advice used to be to senior citizens, all you got is Social Security. Don't file a tax return. There's no reason to. But now with ID theft, the way it's getting, we're telling people it's a good idea to do it. And especially this March 9th, if you remember, Tom, I talked about it last week. The Social Security is launching a big campaign for scam awareness. They're calling it Slam the Scam. They're got a lot of media on it, a lot of social media, and they're sending out a lot of emails about it. And I'm glad to see them do it. I applaud them for it. They're really trying to make senior citizens especially aware of these scams that are targeting them. So we tell people, go ahead and file a tax return. Again, you can do it for free. Many places will do it for free, or fortunately, we charge, because that's the business we're in. But we do charge a nominal fee for seniors that want to file a tax return, and it's just a good idea to do that. Again, the free tool at the IRS.gov, you can do that there. So I hope I explained that. Now, a lot of, one last thing, a lot of self-employment, like the IRS website says, well, if your self-employment tax is at $400 or more, because you're really not going to have any amount of money due under $400 if you're self-employed. I tell self-employed people, go ahead and file a tax return, even if it's less than $400, because I'd rather see you file that tax return and get that NEC, that 1099 cleared up. So there is a $400, if you made $400 or more, you have to. They say if you made $400 or less, you don't have to. I say no, do it from $1. That's just been my experience with the IRS, because I've seen them send out the letters. And people get the letters and say, well, I didn't make more than $400. I'm like, yeah, but you got a letter. Let's reply to the letter. So to avoid that. Okay, let's go ahead and take our first break. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. I want to tell you about another great local business, Forest City Concrete and Grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City Concrete and Grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you.
A good sign is good business. Make your business stand out with a professional sign from Dia Signs and Graphics. Successful companies all over the United States trust the team at Dia Signs and Graphics. With 25 years of professional experience, we have the ability to present your company's image in the best light. Not only display signs, but Dia Signs and Graphics can print banners of all sizes. If you need magnetic signs or window and vehicle graphics, call on Dia Signs and Graphics today. We offer a full line of sign products for any event. 3D, sandblasted, storefront, and monument signs are just a part of a complete selection of quality signage. Professional signs and banners to fit any budget. Let your business stand out. Call Dia Signs and Graphics today at 286-4900 or stop by the sign shop located on Main Street in downtown Spindale. And check our website for more suggestions at diasignsandgraphics.com.
And D&S Signs has moved. They're now at 1621 Porsford Road in Rutherford. That address again, 1621 Porsford Road.
We are back. WCAB AM 590 FM 100.9. The program is Gilbert Talks Taxes. Those of you live streaming, thank you. Good morning. We are live here in the Blue Room this fourth day of March. And what's happened to, it's like gone. Winter's gone. It is rainy and wet and warm. And everything has blossomed. I can tell because my allergies. I drove into Tryon, to our Tryon office at 226 South Trade Street, Tom, the beautiful Art Deco building, right off the historic downtown. I was driving to the beautiful Art Deco building, and I when you get off the highway there and you come to the turnaround, they've got these beautiful flowering cherries and just all these beautiful trees. They're all in bloom. Everything's in bloom. I couldn't believe it. It was like all of a sudden, surprise, it's all here. And the tulips are all coming up, and everything's coming up. And you know what I'm worried about? I'm worried about Bamalam. I'm worried about the 4 feet of snow. The peach blossoms are out. Yeah, I'm worried about Bamalam. Yeah, and I'm not having to cover the peonies yet, but that's coming soon. It'd be great if I could sleep through the night without worrying about the peonies. Actually, I can sleep through the night not worrying about the peonies. It's Christy that wakes me up at 1 o'clock in the morning to ask me if I've covered the peonies, which she knows I haven't, because she's the only one. She's the only one that worries about the peonies. Did you cover the peonies? No. Are you? No. The conversation starts like this. Are you awake? I am now. Yes, I am now. Yes, and I know it's coming next. Did you cover the peonies? Oh, it must be March. Yes. So anyway, it was, and the weather today's supposed to be, what's supposed to be? It's supposed to be warm again. Mid-60s. Mid-70s by the first of the week. Yes. Okay. Well, come by and see the flowering cherries at the new office. They're in bloom too, at 704 Oak Street. Like the way I segue right into that. At 704 Oak Street in Forest City. But we were worried about those. Those needle oaks had grown over them. One of the first things I did when we got the building was have those cut back, and I was worried about those four those 4 cherries, and they have just done unbelievable. They are so beautiful. Yeah, I love my flowers, and we're going to have lots of them this year, I think, at this early in the season. So here we are, this 4th day of March again, warm 4th day of March. The tax filing season is, I already talked about that. Well, Tom, I'm going to get into a very serious subject. As I say, as I'm laughing, I actually thought, okay, so Emily actually told me about this, and I thought it was a joke at first. I mean, not a joke like a joke, somebody was playing a joke, but I thought it was somebody was doing this as being funny or trying to be funny. They weren't. This is actually as real a thing as there is. You know how there's all these programs about health and all that. Maybe Gilbert Talks Taxes needs to get into that. Have a health program, Tom. Yes, because we found that we can help people with ferocophobia. Oh yeah, ferocophobia. It is a real thing. Tom, what do you think ferocophobia is? The fear of taxation, taxes, and the IRS. Yeah, and I thought it was a funny thing, but it is not. Psychology Today, and I'm quoting from the February 12th, 2021, Dr. Dale Hartley, who's an MBA and a PhD, kind of a strange combination. Dr. Dale Hartley, MBA, PhD, this is actually peer-reviewed study he is working on and has created the phrase ferocophobia, fear of taxes and the IRS. It comes from the Greek word phoros, which is Greek for taxes, and phobia, of course, anxiety, tax phobia and anxiety, and goes on to a pretty long, interesting to me only because either this guy has a lot of free time on his hands or he's really serious about this. I'm not sure which one it is. I mean, it's peer-reviewed. Actually, this goes all the way back to 1984. There was an article in the Washington Post where psychiatrists, Dr. David Charney, a psychiatrist, was studying the fear of filing. There were people that were actually had a fear of filing, specifically their tax return. He was looking at a broader picture of people who had an issue with forms and completing forms, and actually was working on these studies. They're peer-reviewed studies. It was part of a bigger study on procrastination and the fear of completion, which I thought was really interesting. So ferocophobia. So we can help you with that problem. If you have ferocophobia, you need to come to Gilbert Carmona Financial Consultants. We will help you get that tax return done. Oh, I can see it now. We can do a whole program on this. Ferocophobia. Too bad I'm not a PhD. That would really give me all kinds of credentials. Ferocophobia. Do you suffer from ferocophobia? Aversion and procrastination to the annual filing of tax returns is this guy's position on this. And I thought it was very interesting. So we do respond to a higher calling here at Gilbert Talks Taxes. We are helping people with their anxiety. And I was looking for some numbers. He's actually working on compiling some studies to come up with some hard data of like how many people are affected by this and what are the percentages, and they actually cite some legitimate work. The Washington Post did a whole story, which I've gone back and looked at it. I didn't really get into that story too much, but that was Dr. Charney of the Psychiatric Center of Alexandria in Virginia. So these are like some big heavy hitters in the psychology world. So in an interview with Sam Beckerman of the Washington Post, they actually interviewed accountants, CPAs, and were trying to create a timeline of studies to interview people and identify some possible subjects and do a double-blind study and come up with some data about ferosophobia, the fear of taxes and the IRS. I don't even know where to go with that. I don't even have a conclusion to this. Stay tuned, though. I got a feeling this is going to be an evolving story. I just don't know why. I am, by the way, reaching out to Dr. Hartley. I got to talk to this guy. Even Tom liked that one. Yes, I need to talk to Dr. Hartley. I want to find out. Listen, I wouldn't mind being part of this study. I'm sure I could contribute something to it. Just to be peer reviewed by the medical community, for me, would be worth it. So, Dr. Hartley, if you're out there listening, which I'm sure he is, if he's working on ferosophobia, because there are no programs dedicated to taxation on the radio that I have found.
Wow, there you go.
So far, I am the only one. I used to say a couple of years ago, I was the most researched program on taxation on the radio. But then of course Todd quickly reminded everybody that I was the only program on taxation on the radio. So we haven't found another one. And actually, that was Todd, the engineer, but the radio broadcaster, Todd Starnes, who spoke here in Rutherford County in the fall. Todd Starnes from Salem. You familiar with him? So him and I met, and we actually talked, and I told him what I did, and I was just asking him for some advice, because he's syndicated on, I don't even know how many hundreds of radio stations for what he does. Of course, this whole thing's political, and there are 2 million people doing political radio programs. I just don't want to go there. And I don't want to go with just investing, because there's a lot of people doing that, and that is, I don't know, that's just not what I want to do. My thing is taxation, and the implications of tax returns, and the investing that I do is tax-based. So I told him what I did, and we talked about it, and he actually listened to some of it on my podcast, and he told me, he said, it's very interesting what you do. He says, I don't know anybody doing what you're doing. He said, and you make it interesting. You make it sound interesting. He said, why did you even want to do that? I said, I like taxes. I don't have ferosophobia, Tom. See, maybe that's it. I'm ferosophobia free. Yeah, maybe I can help other people that have it. Let's take a break right there. Let's stop there. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
This is Kimberly. If you owe the IRS for prior years or you have unfiled tax returns, don't call those national toll-free numbers. Affordable, secure, and local help is available for you. Call Gilbert at 828-289-9300. Gilbert is an enrolled agent permitted to practice before the IRS. Taxation is his specialty. He knows the latest laws to help you with your problem. Avoid garnishments, levies, and liens. All initial consultations are free. Call Gilbert at 828-289-9300.
Hi, I'm Sandra. My husband Peterson and I own Precision Detail and Tint. We invite you to come to our new location at 620 U.S. Highway 64, Rutherfordton, on the corner of Silvers Lake Road and Highway 64. Whether you need specialty detailing for your car, RV, or boat, or window tinting for your automobile, or home or business, we can help you. Voted Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. We're back. The program is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. Those of you picking me up later on GilbertTalksTaxes.com on the live, well, that's not live, on the program is live right now, Saturday morning from 8 to 9, but those of you that pick me up on the podcast later. We have the audio. And those of you live streaming me right now, www.wcab, I'm sorry, I always get that real fast, www.wcab59.com. Those of you doing that, thank you. And those of you that pick it up later in YouTube and other social media outlets, thank you, thank you, thank you. Yes, we are accepting new clients. Yes, we are filing tax returns. Yes, we are very busy. Those are usually the three questions we get. Are you accepting new clients? Are you filing tax returns? And are you busy? Yes, yes, and yes. But as my father used to say, if you want something done, give it to a busy man. It'll get done. Don't give it to the guy that's got nothing to do. Because you know what? There's a reason he's got nothing to do. Okay? Give it to the busy guy. Okay, so those of you that were live streaming saw me. I was on my phone, which I'm never on my phone during the program, but I was calling Christy to send me a copy, to take a quick picture of my tax bill assessment notice. Tom brought it up during the break, and I was actually thinking about talking about this. This is a pretty heated subject right now. So, but everybody is getting their tax assessment notice letters. Okay, so you're getting this letter in the mail. If you own property in Rutherford County, Polk County, they're all, I think pretty much everybody's assessing. This is the assessment. And the reason they have to notify you is because you can actually appeal that assessment. Okay, so they're going to send you this assessment notice. And I believe the reason I wanted Christy to send me a picture of mine, I should have brought it. I got mine in the mail yesterday. They've been coming out for the last few days. And people have been calling us. What is this? What does it mean? What do I have to do? Pretty much if you read it, it walks you through. But you know, it's in that 9-point font that you need a magnifying glass to read. Yeah, right. You know, like the disclaimer on prescription bottles. Yeah, it's one of those. So, but it tells you right there, this is an assessment, and you have, and I believe, this is why I wanted her to send me this, I believe you have 30 days from the date of the letter. It's 30 or 20, I can't remember. I'm pretty sure it's 30. The problem I have with that is that, so my letter's dated like February 24th or 5th, and I got it yesterday. So I got it yesterday, the 3rd. So right there, you've lost, you know, so if you really want to appeal, you get on it. And, you know, I've seen people appeal because you just follow the forms. You know, I mean, follow the form tells you what to do. Just follow the lines on the form. So you'll see at the top there the header, and it'll tell you what your assessed value is. Now, these numbers are not arbitrary. They are basing these numbers on something. Okay, typically it's values in your area of what homes have been selling for and what homes are, you know, what the tax department's appraising them for. So they're going and doing their annual, but they're looking at what sales prices are. And what's been happening in the last 3 years, it has been crazy. I mean, people have been buying homes sight unseen, paying more than list price, so everybody knows what's been going on. And some of these assessments are very, very high, or at least people feel they're very, very high. So you can appeal it, but you just can't, you know, write them a nasty note and tell them I appeal and send it back. You actually have to have, and I've seen people do that. They'll, you know, this is not the time to let, this is not the time or the situation for you to tell the tax department what you think of them. Okay, that's not, yeah, I know, Tom. And I've seen it. That's why I'm saying it. Okay, I have read some of the notes that the people have written back. No, you need to be able to present some concrete facts and evidence. So it's going to say on there, you know, the property tax bill and whatever information, you know, the parcel number and all that's going to be on there, and the size of your lot. Now, if you have multiple lots that are all deeded individually, you're going to get them one for each one. So some people are literally, they might own one big parcel, but that parcel might be made up of, you know, 10 different deeded properties. Even though it's just one big old pasture to you, to the tax department, it's 10 different properties. You're going to get 10 letters, okay, telling you an assessment for each one. So look at that area size it'll say on there, 1.39 acres or whatever, 0.5 acres or 10 acres, whatever. And then, you have to address each individual one. And then it'll tell you the assessed value for that parcel. Okay, whatever, and this is what their proposed assessment is. Whatever it is, $339,000 for your house. So you say, there's no way my house is worth $339,000. Again, it's going to ask you there to write an explanation of why. Now, I don't remember, because different counties, it looks a little different. They're not asking you what you think it's worth. They're asking you just, do you agree with this or not? Now, if you agree with it, you don't have to do anything. You look at it, it says my house is worth, my house is worth $8,000. Okay, whatever it says, or $800,000. If you agree with it, file it. Just put it away. You don't have to do a thing. But if you disagree with it, that's when you've got to respond, and you have 30 days from the date on the letter, not the date you received it, the date on the letter to respond. Okay, and the letter is dated, so you got to respond, and you need to tell them why you disagree, and you need to be very specific about why you disagree. So an example is, I tried to sell my house. So this is a real example of one that I had with a client a few years ago. This was Polk County, and it just happened that this fellow was trying to sell his house. And he was asking, and I'm just going to make a number up, he was asking like $429,000 for the house, and nothing, no takers, no nothing. So then he had an offer for, I can't remember, I'm going to make up a number, $399,000. He had an offer. He accepted that offer, and when the appraisers came out from the bank, and it might have been FHA, I can't remember, but it was a pretty good appraisal. It wasn't just it was a pretty thorough appraisal. Might have even been VA or FHA. It was one of those. Appraisals came back for like $30,000 below that. So when he got a tax bill saying that they wanted to assess his value at $439 because the neighborhood had gone up like that, he said, "There's no way. I tried to sell it for $429 and I couldn't, and the thing fell through at $399." And he actually had that file from when he tried to sell it the year before with the notes about the appraisal. And he came to the tax board and presented all that, and they backed off his appraisal. Okay? But he had that documentation, and that happened to be his situation. Now, do you want to pay for an appraisal and get an appraisal? I don't know. That you just need to understand what you're going to do, but understand the implications involved. That's going to be your tax basis until they do the next assessment, which could be 5 years. So that's the tax rate you're going to be stuck at. Okay? And for some people, this has been pretty substantial. Okay? So you need to at least read the letter and make sure that you're okay with it. Beyond that, I mean, I can't give you any advice what to do. You know what your property's worth. You know what you could probably sell it for. But just know that's going to be your new tax basis. And if you're being escrowed at the bank on your mortgage and it's a substantial jump, they're going to jump your escrow. Now, this has nothing to do with Forest City and Spindale and the different communities that Forest City doubled. They more than doubled their taxes last year. Their portion of it, now not the county tax, just if you live in Forest City, city limits, town of Forest City, city limits, your tax bill doubled last year. But that was because Forest City decided to double their millage rate. Literally, it was more than double. And it was pretty heated how that whole thing happened. A lot of people protested it, but they all voted, all but one council member voted for it. They all voted unanimously, not unanimously, all but one voted for it. They said they needed to do it to continue to fund the city. So they did it, but that's not that. They can do whatever they want at the town meeting. That's where they set their rates. I mean, they can pretty much try to do whatever they want. They still have to vote on it and make it the public, make it available to the public, and so on and so forth and all that. But this is the county, and you can fight this. You can appeal it. So a lot of people are getting these. If you haven't gotten it yet, you will. They've gone out. Most everybody should have gotten it by yesterday, from what I understand, although probably some will trickle in today and the beginning part of the week. But again, read it, try to understand it. It's pretty simple, but I know you told me, Tom, there's been a lot of social media flare-up around it, Facebook and stuff like that. Yeah, I can imagine. And, I hate that people use that argument. You said some people were saying, well, where I'm from, taxes were a lot higher. Well, what does that got to do with anything? That's why you moved here. That's why you moved here, okay, to get away from taxes. Because your taxes where you're from were crippling. So you left. You sold your overpriced house, and you came down here, and you overpaid for a house and raised the prices for everybody else down here. And then you're okay with it. I know. Well, I tell the story about remember the fella Tom, not his real name. A fella, his daughters moved. Now they live in they're in Gaston County. They moved to Gaston County, and so he was still up in New York, taking care of his father. He had an elderly father. That had all kinds of health problems. So the daughters kept wanting him to move down here, he said he hated to get together with them for the holidays because it's all they talked about. And I can see why. I mean, this is a beautiful part of the country. I came from Illinois here. I came from a suburb of Chicago. This is beautiful compared to the city. And I mean, just how these cities have just deteriorated. It's just horrible. And the fact that we have a decent tax base and decent property values, to me, was a bonus. Because you're up there and you don't feel like you're getting anything for your money. That's the problem, is you're paying these ridiculous taxes. And it's like, well, what am I getting for it? More crime and more decay. So he's in New York, and he actually wasn't in New York City. Don't think New York City. He was in Albany, which is where the capital of New York, which is really far from New York City. It's like on the other side of the state. So he's there, and the daughters are just constantly telling him. So now the father passes away, so he's getting ready to move down here, and they're sending him real estate listings. Like every day, he's getting emails with real estate listings. So he sends me an email, and he sends me some of these listings, and he said, "Hey, can you call me?" So I call him, and I got him. Actually, I was just advising him. He's an advisor to a client that I have, so that's how I come to work with this man. So he says, "Can you come?" So he says, "Gilbert, I trust you because you're not trying to get me to move down there. My daughters think every one of these houses is a palace, and I should move, and it's a deal." And he goes, "You at least will be honest with me." And he sends me some of the listings that he had narrowed it down to. And I'm going over them with them, and I'm like, well, yeah, that's reasonable. Yeah, that's the going rate, and yeah, that's nice. And then he brings up the issue of property taxes. And he says he was looking at one there, and he says, well, what's the property taxes going to be on that? Because it wasn't on the listing that his daughter had sent him. And I said, well, Tom, I don't know. If this was in Rutherford County, I know what our tax rate is. And if this was in Rutherford County, this house would be, your taxes would be about, and I just did some quick math there, and I said, it'd be about $1,600. And he goes, oh, $1,700 a month. Okay. He goes, okay, that's a little high, but that's okay. And I said, no, Tom, no. Not $1,700 a month. $1,700 a year. And there's this silence. And he goes, Gilbert, I pay $16,000 a year in property taxes for my house here. And he told me the story. He said, we're getting the house ready to sell. So the realtor said, hey, let's reseed your front yard to make that, give it some curb appeal. Let's trim the bushes, things realtors do. And so Tom said, yeah, sure, whatever you think. So they seeded stuff, and they had to run water pretty constant, to get the seed in and all that, because it was kind of summer already set in. It was hot. And he said, my water bill was $1,600. You're telling me that's what my tax is going to be? So these are the people that are coming down here going, oh, no, this isn't high. Well, it is high if you live here and you've been here for 25 years, 30 years like I have. Okay, let's take a break. Let us take a break on that one. Let's come back and let's talk about some small business tax stuff, because sure, why not? This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
Jesse James Railroad Express has moved to a new location, 126 Park Lane Plaza in Rutherfordton, and they've changed their name, Jesse James Chowhound Canteen. A new name, a new place, and a limited menu. Currently, you can get smoked sausages, kielbasa's, and of course those delicious hot dogs. And you can get coleslaw, macaroni and cheese, and potato salad. Stay tuned for their new menu at their new place. Hours are Tuesday through Saturdays from 11 until 2, closed Sundays and Mondays. Jesse James Chowhound Canteen, 126 Park Lane Plaza in Rutherfordton. Call 286-9368 and get a 99-cent hot dog with mustard, chili, and onions, Tuesdays only.
Hi, this is Christy. Gilbert and I are excited to announce our new name and location. Carmona Financial Consultants at 704 Oak Street in Forest City. Let us help you with your taxes. Let us help you with your investments. Carmona Financial Consultants at 704 Oak Street in Forest City. Stop by or give us a call at 828-289-9300.
We are back. Gilbert Talks Taxes. Christy, thank you for that wonderful endorsement. I was actually just on the phone with Christy. I asked her to go ahead and take a picture of that tax bill, because I left mine, or not, it's not tax bill, I'm sorry, tax assessment notice. I left mine on the desk. I got it yesterday, and I was reading it because I am a tax person, and that is what I do. I read these tax notices. The program is Gilbert Talks Taxes. And let me go ahead and get my telephone number out one more time. We are doing tax returns right now. We are accepting new clients. My telephone number is 828-289-9300. That's 828-289-9300. And we also do tax issue resolution. So this is what happens. We start sending these, we send these tax returns in, and then what happens after? Because people say, what do you do after April 15th? Let me tell you what I do after April 15th. Letters start coming from the IRS. And that's one thing that makes us unique, because I am an enrolled agent. And now I have Emily. Emily's been on the program with me. She's on every other Saturday with me, or been on every other Saturday with me, her schedule depending. But Emily's an enrolled agent also. We are doing tax issue resolution. Not only do I do your tax return, when the letters come, I can take care of them. And not everybody does that. And many of you that have come to me from somewhere else were shocked to learn when they got there, when they got a letter from the IRS, and they took it to their tax preparer, and the tax preparer says, "Oh, I can't help you with that. You need to go to a tax professional for that." And the guy is like, the one man said, "What are you?" "Oh, no, I'm a tax preparer. I just prepare tax returns." And last week we were talking about scams and ghost preparers. Last week I said there, I ran into the case where Christy is texting me. That's why I seem distracted here. She sent me a copy of my Rutherford County Revenue Department letter. But let me finish this thought. So the lady came to me. She got a letter from the IRS, took it to the tax preparer, and the tax preparer, and on the bottom of her tax return, it said self-prepared. And I said, this is illegal. And she paid the lady $150 to do her tax return. And she did it on TurboTax. And I said, this is wrong at every level. Had the refund mailed to a P.O. box that belonged to the tax preparer. I mean, every red flag that the IRS warns you about, this preparer had. This was like a poster child of somebody running a scam. You know, and then the lady didn't get her refund. Well, of course she didn't get a refund. It didn't get mailed to you. So, but these things are out there, so people just need to be aware of these scams. There is one. I wanted to talk about some business stuff. I wanted to talk about the mileage. I'm getting a lot of questions about mileage, but before I get to that, let me look at this. So Christy sent me a copy of my tax bill, and basically, so what it is it's not. I keep calling it a tax bill. It's not a tax bill. It's a letter from the Rutherford County Revenue Department, and it's the reappraisal division that is putting these out. And again, there is a date of the notice on there. Mine was dated, by the way, because I'm looking at it now, 2/22/2023. and you have 30 days from that date. But I got mine in the mail yesterday. So, is that fair? Not really. I mean, because you've got a lot going on this time of the year. And they really should have taken mail time into account with this. So the instructions are there, and it says right there in big red letters, it is not necessary to make a personal visit to the tax office to appeal. Appeals will not be taken by telephone or in person. That was the thing I wanted to say. That's why I wanted Christy to send this to me. Appeals must be mailed to 125 West 3rd Street, Rutherfordton, North Carolina, 28139. Or you can fax them. You can actually fax your appeal in, which I would recommend. Now, the important thing is that an appeal review may result in the assessed value being 1, unchanged, 2, reduced, or 3, increased. So an appeal is not a one-way street. And that's the warning. That's why I wanted this. I'm thinking there's something I want to tell everybody about this. It's a two-way street. I've never seen it increase, but when you're presenting all the evidence and they're looking at your case, they might say, hey, we were low on this. Let's bump it up. So just be aware of that. And pretty much the instructions are there. It's very simple. And the issue is, what was the fair market value of your property? And they're going to ask you that question, your opinion of value. What is the fair market value of your property on January 1st, 2021? And then that's when you're going to give your supporting information in that whole paragraph. And if they give you 4 lines there, if that's not enough, you can attach a letter. Okay? Please provide a supporting documentation for your value, for your opinion of value. And if you have an appraisal, that is really good. If you have a recent appraisal, especially in the story I shared about the man who couldn't sell his house because of it. And then they ask you why you feel it's incorrect, your contact information, and you have to affirm that everything you're saying here is true. So let me take that back. You do have to tell them how much you think it's worth, but you got to have supporting document for it. What I said is, don't tell them what you think it's worth. In other words, don't give them your opinion. And that's it. Oh, this is what it's worth. You need to tell them why you think it's worth that much. Let me say it that way. See, not bad for a topic I wasn't even prepared to talk about, huh, Tom? And then the cover page of that pretty much gives you the instructions. Okay, so, and that is, Christy just sent me a text. Appraisal based on what? The super inflated market value of the last 2 years? Yes, Christy. And everybody else that's getting these letters, and that's the problem I have with them doing it now. We have had a hyper-inflated market in the last 2 years, and it is leveling off big time. Anybody that's got a house on the market now will tell you they're not getting 20,000 over list. they're not even getting list at this point, And I've got people telling me that that people are. Oh boy, I just tapped into something. I am getting the text now. This is a hot subject I see, Tom. Oh, yeah. Hot subject. Okay. Oh, yeah, exactly. Yeah, people are shocked. People are shocked at what these things are doing. Well, again, what's going to happen? What is ultimately going to happen? I don't know. And the other problem I have is that they don't seem to be lowering them. They just seem to be raising them, right? And which is not the case everywhere. Okay, some business stuff. A problem I'm seeing with tax returns this year, with business tax returns. Folks, what am I seeing? Now, a lot of our people we work with a lot throughout the year. We're not just, you come and drop off and then we never see you again. We try to stay in touch with you. I reach out to people, and if I ever, come across anything that I think might help you, I shoot you an email or whatever, and we try to be proactive. That way, when tax time comes, we can do it quicker, faster, more efficient, more accurate. But I notice 2 things I want to talk about. Is depreciation is one of them. Just had a new client come this year, brought me last 3 years of tax returns. Brought me 1 year of tax return. I said, I need to see all 3. Got them to me. his prior accountant, for whatever reason, did not depreciate his equipment. Not even on the, wasn't even on the tax return. Wasn't even on there. Don't know why. The man had over $140,000-ish worth of equipment that he bought. All, and this is pretty industry-specific equipment. I know sometimes I've run into it where some CPAs and CPAs more than others for whatever reason, more than just normal preparers, because they tend to be more conservative. If it's an asset that might have personal use, they might say, no, this was a personal use asset and not do it. But these were industry-specific, industrial-grade machines, all of them costing $15,000 plus. The guy had 6 or 7 of those and a bunch of other machines that go with it. I mean, this isn't something that a homeowner would buy. So, so the texts are coming in. Whoa, Tom, I really tapped into something there. I opened that one. Yeah, well, hey, I jumped in with both feet. I knew what I was doing. So they didn't depreciate it at all, but this wasn't even on there. And so when you're doing your tax return, just be aware of that. This equipment expenses is a major write-off for most people. How that did not get on anybody's radar. And this man legitimately is all about running his business. And he said, I know nothing about tax returns. He goes, but just last year it just didn't feel right. He goes, the amounts didn't feel right. It didn't coordinate with what we had, and we just wanted to have. He actually came to me on a referral. He said, I just wanted to have another set of eyes look at this. And I mean, I looked at it literally at one glance. I found several things that were just not right. One of them was the depreciation. And I know depreciation is confusing to normal people because, okay, you buy a piece of equipment, you spend $15,000 for a piece of equipment. Why can't I just expense it? Well, you can. Or you can depreciate it. How long will that piece of equipment last? Well, it's anybody's guess. But the IRS has guidelines that we follow. Is it a 7-year piece of equipment? You know, is it a 29-year piece of equipment? You know, whatever, like rental property, commercial rental property, 31.5, whatever, however many years. And then there's accelerated depreciation and there's bonus depreciation. So do we want to expense it all now or do we want to drag it out for a few years? And that's when we have the conversation about which way do you think your business is going to go. So this depreciation thing is very, very important. It's an important topic. Make sure it's being done right on your tax return. The other thing is mileage. Just going to be real quick on the mileage. The IRS does require you to have a mileage log. Now, how detailed does that mileage log need to be? Well, you know, it's you can spend a lot of time creating these mileage logs. I tell people, get one of those pocket calendars, stick it in your car, and depending on your driving habits, you know, you should try to post in it daily. If you can't, please at least weekly, because after a week, people tend to forget. Now, a lot of people have been using these apps for your phone or your GPS. If you have a GPS on your vehicle, I know some of the dash cams come with GPS software that will track your mileage also, and some of it's really sophisticated. The IRS doesn't care how you track it. What they want to see in an audit is a paper log. So whatever you get, you need to be able to print it, give it to me. It needs to make sense that I can give it to the IRS agent. Okay, that's the bottom line. And the problem I've seen with some of these apps is people switch apps. They'll get a new app. They'll get a new phone. And then they have no access to that app again. They forget their password. They forget their login. They forget what the app's name even was. So, you know, it's not a park it and forget it kind of a thing if you're using these apps. Just be aware. So in an audit, the IRS wants to see a log. Now, last year, because there was such a spike in fuel prices, especially diesel, for you guys that burn a lot of diesel fuel, you know what I'm talking about, they actually split the tax rate, the mileage rate, for January 1st to June 30th, and then July 1st to December 31st. We actually have 2 different mileage rates. So, yes, I do need that log broken out. How many miles did you do before? How many miles did you do after? A lot of people have just been taking their total mileage and splitting it in half. I don't know how that's going to do in an audit. We'll find out. Okay, we're out of time. The program is Gilbert Talks Taxes. I will be back next week, 8 a.m. right here, WCAB AM 590, FM 100.9.